In this presentation, we're going to create another sales receipt, however, this time for a service item rather than an inventory item. In other words, we're imagining we're making a sale, we're in our store, we're making a sale, we're providing a service, however, rather than providing inventory, and we're going to be collecting payment at the point in time the service was provided. Let's zoom into it with Xero. Here we are in our Get Great Guitars dashboard. We're going to then go over and open up our report. Let's open up just the trial balance this time. So I'm going to go to the accounting dropdown. We're going to go look at those reports. We're going to go down to our trial balance, the trusty trial balance, which should be in your favorites. I put it in mine. I recommend putting it in yours. But if it's not, it's down here in the trial balance under the accounting section. Once it opens up, I'm going to be right-clicking on the tab up top, and I'm going to duplicate that tab up top. Then we're also going to go over and just consider our flow chart. So I'm going to consider the flow chart. This is on QuickBooks Desktop just to consider the flow chart. We're in the customer section. We have in prior presentations entered an invoice, which means we did the work before we got paid. And we've considered the sales receipt, which we're imagining we're in the store and someone comes up with inventory, let's say goods, items from the store, and they pay for it at that point in time, like at the cash register, we can imagine. And we're going to do the same thing with this item up top, make the sale as if they're in the store and whatnot. However, it's going to be for some type of service. So if they come into our store, they already have their guitar and they're like, hey, could you tune this or do some kind of like technical thing to it that I'll pay you for and make it, work better. Then we're going to take that and we're going to do that and we're going to get paid at the same point in time within the store. That's going to be the difference here. And it's easier because that means we don't have to deal with inventory. We're not dealing with the cost of goods sold or the inventory. And if you're in the United States, you're also typically not going to be dealing with service items with the sales tax, which is nice as well. So let's take a look at it. We're going to then go back on over to our reports. Let's bring up the trial balance. Let's take the trial balance up to January. So we'll be looking at January and then we'll update that report. It's always nice to imagine what's going to happen before we then enter the data. So it's going to be nice and simple this time. We're going to say it's going to be basically a received payment, sales receipt type of item. We're making a sale in the store. Therefore, we're getting paid at that point in time. We're not going to put it into the checking account, but rather into the clearing account. Clearing account should then be going up. The other side is going to be on the income statement. It's going to be down here on the income statement. It's going to be a sales item, but maybe not. It's not going to be called merchandise. We might call it like a revenue or service kind of sales item, but it's going to be some kind of revenue account that will be going up. Nothing else is going on. No income, no cost of goods sold, no sales tax. It's great. So we're going to go back on over to the first tab and let's go on to the plus button. And then we're going to go down to the receive money. Receive money. We're imagining we're in the store. We're doing some kind of service on a guitar and someone's just going to pay us for it. We're going to put it into our clearing account, our holding account, until we go to the bank, which we really need to do because we kind of have a lot of money in that clearing account at this point. And we're going to say that this is going to be going to Sam. This is the customer, by the way. Sam, we don't have this customer set up, so it's Sam the Guitar Man. That's our new customer. Sam the Guitar Man. It's going to be a new contact, new customer. I'm going to hold down control and scroll up a little bit, so I think we can... I don't think Xero will do anything too funny if we do that, so I think we'll be okay. I'm going to go to January. Let's make this on the 16th. So January 16th. And then we're going to say that we did for Sam a diagnostic on a guitar or some kind of musical equipment. It's our standard thing we do. It sounds more like an automobile term than a guitar term. But the point is, it's some kind of service item that we do and has a set price. And that price is $68 per unit. And we're going to do 4 of them. So there we have it. That brings up to $272. It's a service item. In the United States, we don't typically have sales tax on the service item, so we don't have to deal with the sales tax, which is nice. So then that's just the service comes out to that $272. They're going to pay us the $272. We can imagine in cash or some other kind of format, such as a check or something like that. What's going to happen when we record this? It's going to be an increase to the undeposited funds or the clearing checking account. And then the other side is going to be going to the revenue account, some type of revenue, this time not the merchandise revenue, but service revenue. Let's save it and check it out. So we're going to save that. Then I'm going to go back on over to the trial balance over here. And within the trial balance, we'll refresh it by updating it. We'll update or refresh the numbers. And we should have an increase in the clearing account. So we're going to go into that 21,210. And we should see an increase of that 272 for the 4 diagnostic guitar and musical equipment things that we did for Sam the Guitar Man. There it is. If we go back up top and we go back to the trial balance, the other side would be on the income statement, which is on the bottom of the trial balance. We still have the income statement basically on this one report. We can go on down and say that's going to be income. Now we have the 2 income accounts, the merchandise when we sell stuff like inventory, and then the other one we're grouping into service. So we have the service income here. That's going to be increasing net income on the income statement. And of course, it consists of just the one item now, which was those 4 diagnostics for Sam the Guitar Man. So that is it. Now let's imagine we need to adjust that sales receipt. So we have a sales receipt, we made one out, we posted it, but now we need to adjust it because there was not only the 4 diagnostics, but we also have some hourly service type information that we need to include in it. How can we get back in there? Is it possible for us to adjust the sales receipt? Yes, it is. So we can do that. We could find it by going to our accounts up top. We can either go into the clearing account, which is the one side that will be affected. The other side went into sales. So it might be more customer. You can go into sales because it'll be there whether you hit the checking account or the clearing account. So I can go to the service sales item and say, all right, I need to edit this thing. So if I go into the 272 here, and then we go into our documentation, we can find the item. Here's the 272. Now you can also find it, of course, if you needed to edit it by saying, well, who's the customer, right? I can go by customer and I can go to the dashboard up top and I could say, I need to adjust this by the customer, a particular sale for a customer. I could go to the contacts and take a look at all contacts. And I know it was to, I believe, Sam the Guitar Man is who we're looking for here. Now, if I go into customers here, note that I may not see Sam the Guitar Man. You might say, well, it's a customer. Why isn't he there? Because really remember that Xero is basically saying all contacts are contacts and their customers when basically they have an invoice that's outstanding in essence. So let's go into all customers and then go on down to Sam the Guitar Man. So we'll go into Sam the Guitar Man here. And then if I scroll down to the activity, we have this receive payment. So we have the receive payment. Let's go into that transaction and view it. So we'll view that transaction. And that's another way we can get into it. Now, if we needed to edit this one, if I go up top and say, okay, we needed to change that, I'm going to go up top and say that we need to edit this transaction and say that we didn't include some hourly service. So I'm going to go ahead and say we need to add a new line item. I'm going to say that this is our service, which I'm saying is some kind of set service again, which is 140, maybe an hourly rate. We're going to say 3 of them or 3 hours of them. There we have it. Now, in the tax line, we should go back into the items and address these tax lines and just say they're exempt because all service items should be exempt. So I have to include that right now just to say it's a 0 if it's a service item. So the inventory items are at 9.5. The other items are at 0. If we go back into the service items on the products and services and apply them all to the tax exempt because they're service items, then that'll populate automatically for us. So in any case, that brings it up to the 692. So then I'm simply going to update this item. So we will update this, and then I'll go back into the trial balance. And I should have done that on the other side here, but I'll then go to the accounting. Let's go on down to the trial balance. I went to the advanced for some reason. I want to go to the reports. That's where I want to be. And then I want to go down to the accounting and look at the TB trial balance. Then we can change the date up top because we want to make it for 2020. So I'm going to say we need this for January of the 2020 and update that report. And then we should have the update that's going to be in the clearing account is now at the 21,630. The other side will be down here in the service item, which will be easier to see. There's the 692 consisting of that one single item that we have in there thus far. This is the only service item that we have. Notice it did break it out between the two line items that are on that one document. So we have one received payment that consists of these 2 different line items. If I was to go into this item like this 420, then we're going to see the one document and the one payment of the 692. The 692 on the other side is going to be on the cash form as just a lump sum of the 692. And that makes sense because if we put that in the checking account, we want the lump sum payment to tie out to whatever's on the bank statement if we were to put it directly into the bank statement. So remember, on the cash side, our goal is to group things together once they get into the checking account in the same format as they will appear on the bank statement. On this side of things, it can be nice for us to see the detail of the transactions that are in there as well, rather than just possibly the lump sum.